Abneesh Roy joins us now, and we're going to talk about ITC with him. ITC stock hit a record high. Is there some more steam left? Abneesh, good morning. Thank you for joining us. ITC at an all-time high. And if I compare valuations of ITC with a Nestle or a Britannia or a HUL, looks like it is still very cheap.
Yes, good morning and thanks. Yes, we have a strong buy on ITC. I take the point that it is at a 52-week high, and last year also, if you remember, in the Nifty, ITC was among the best performing stocks, and we expect that to recur this year also. In fact, in our model consumer portfolio, we have a 30% weightage on ITC, which is the highest along with Godrej Consumer, and we also like Britannia and HUL. So what we like in ITC is clearly, even in Q4, we expect double-digit volume growth in cigarettes to happen. And you see a 4-year CAGR in Q4 and Q3, it will be fairly similar. So they have actually continued to do quite well. So legal cigarette industry is gaining market share from the illegal, which is still around 23% of the market. But illegal is losing market share because of the rational tax policy. Also, we expect that in FMCG, just like other companies, ITC's gross and EBITDA margins will also start expanding, improving from Q4, and FY24 should be a good year from a margin recovery perspective. Slight issue will be in their agri business, because agri business last year in Q4 had a very high base. So there'll be some dip, but that's a commodity kind of a business. The key businesses for ITC are obviously cigarette and FMCG. So the market is liking that for 3-4 years. Government has shown very rational tax policy. And now we'll also see how the value unlock happens in the hotel business. That is something which will again show that the focus of the company is more on the cigarette, FMCG, those kind of stronger return ratio businesses.
Sure. You know, the other thing I also wanted to talk about, Abneesh, is that what happens to valuations? Because we were just looking at the peer comparison, and valuations, even at this all-time high on ITC, are still very, very attractive. So even at 400, does it become a buy?
Yes, it is definitely a buy. You're right that when you compare ITC's valuation with the consumer staples, you will see that ITC is still quite attractive. But you also need to see how cigarette stocks globally are valued, because ITC is still 80% of the profit is still coming from cigarettes. So that is something also we need to take into consideration. But given the global uncertainties, and yesterday we saw the tech sector getting impacted, we also saw that even domestically the startups and a lot of the other kind of discretionary businesses are getting demand slowdown. In that scenario, ITC with such high predictability of the earnings, very good dividend yield also, and the kind of value unlock they are talking about in the hotel business, I would say that those triggers clearly remain. So FMCG should do well as a sector, and then ITC clearly should be among the best performing stocks in that pack.
What about the outlook when it comes to the hotel business as well for ITC, Abneesh? Because now we're starting to see accelerated growth there as well, which, you know, a lot of people tend to ignore when looking at ITC from a holistic standpoint. Do you think that that is going to remain a key trigger?
So hotel business, if you see, ITC is one of the key hotel players in the country. But in the overall target price, cigarette and FMCG are the bulk. So the hotel business doesn't really contribute too much from a target price perspective, but the intent of company is very clear. Last few years, they have said that they will focus on the management contracts rather than doing too much of investments on their own. Of course, some marquee properties in key cities will continue, but the whole idea is to have a more focus on management contracts that will improve the return ratio, because hotel business intrinsically is a low return ratio business. But what management has highlighted also is the value unlock here in hotel, and that is something investors will like, because in ITC it's a very diversified business. So it's more of intent on value unlock rather than the hotel high growth numbers which you highlighted. I don't think it impacts too much from a target price perspective for ITC.
Okay, fair enough. Just wanted to understand the overall outlook as well in terms of the SOTP valuation for each of the businesses as a percentage of the total value. Cigarettes, of course, have the mammoth share at about 58%, FMCG 26%, hotels, we just discussed it, a meager 4%. Just wanted to understand what your outlook is in terms of how each of these businesses really could perform, paperboard, agri, or even ITC Infotech.
Yes, so on the key businesses which you also highlighted, cigarette and FMCG, we are quite positive in terms of outlook in FY24. We expect double-digit earnings growth for both these businesses, and we expect good margin recovery for the FMCG business, which should drive a strong double-digit earnings growth in the FMCG part of the business. Even in cigarettes, we expect double-digit earnings growth driven by a healthy volume growth and a price hike of around 2%. On the rest of the business, paper, again, ITC is quite well placed in the mid and premium, and there also we are seeing slight deflation happening because the raw material side has corrected. So you will see that the sales growth number and slightly on the margins in Q4 also, there will be some pressure, but that's because there is a correction in the commodity cost for paper companies. Agri is based on the macro, based on how wheat production is, how the inflation is. So that will be linked to how government policies are. Currently, wheat exports is banned. So ITC, of course, is doing a great job in terms of the tobacco and other commodity exports. But wheat exports last year had done really well, which currently there is a ban. So that is something we need to watch out for. But overall, definitely tech industry also is facing some headwinds, as we have seen in the Infosys results and TCS results also. So that again is not something which is really going to be a big trigger. My view is clearly that cigarette and FMCG, which are the bulk of the business, is going to see a great year in terms of the FY24.
Abneesh, what happens with Reliance's foray now into more regional FMCG brands? They're planning to partner with 10 million merchants, we understand, over the next 5 years. They're looking at, or rather the recent acquisition includes, the likes of Lotus Chocolate, Socio Hajuri, a partnership with Maliban as well coming in. What happens then to the domestic play? I mean, whose market share do they eat into with this?
Sure, good question. And in fact, we released a very detailed report on Reliance FMCG yesterday only. So one thing is, yes, anything Reliance does, the other FMCG players and analysts will see very closely, very seriously, because Reliance has shown that they can disrupt a sector. Having said that, in FMCG, the disruption is very rare by a new player, because here brand loyalty, the distribution and the technological know-how and the data which now all the large FMCG companies have, it has become now very difficult for newcomers to really disrupt the industry. Also, we have seen that D2C startups in FMCG are also now having a very tough time, and we have seen the listed FMCG companies also acquire some of those, and that again will help them in terms of market share. So I will say that in most of the personal care and even in food, say biscuits and chocolates, it will be very tough for a new player to have a big dent in terms of market share. My sense is Reliance knows all this, so they will also pick and choose which battle they'll focus on. So, of course, commoditized kind of FMCG, where, say, Adani Wilmar has a good play, there the market share of the organized players is fairly limited and the opportunity size is very large. And being India's largest modern trade player and a very strong e-commerce grocery player also, Reliance already has a right to win in those kinds of FMCG, which are a bit more commoditized. In the pure play FMCG, I think Reliance will do well in the namkeen and in the surface cleaner, for example, because there again consumer is quite happy to switch if there is a affordable pricing. And there, in fact, in some of these categories, Reliance has done well in their own private label business in the modern trade. But I would say that in personal care, soaps, and a lot of the hair care, etc., I think it will be very difficult for new players to get market share from incumbents because of the reasons which I mentioned. In Kirana, if you see, shelf space is a big challenge. So, and we have seen Kirana lose a lot of market share to the modern trade players, and Reliance obviously is the number one there. So that again, we need to see how easy it will be to get shelf space. Here, product differentiation is key. And one more last point is, if you see, even in soaps and detergent, we have seen that HUL has done quite well, has gained market share over longer time frames, because HUL's pricing, because of the scale and because of global sourcing, and then they have all three subsegments being very strong, lower end, mid end, and the top end. Again, it's not easy even in these kind of products. So I will say Reliance can get a lot of scale over a 4-5 years time frame, but in the pure play personal care and even in the biscuits and chocolates, I would say it will be tough. One interesting battle will be Cola, because their Campa Cola is a decent brand. And of course, Reliance has acquired a Gujarat-based business also. So that is looking interesting. Here, challenge for Reliance will be putting up Visi coolers in the shops, and second, tying up with the manufacturing, because this is a high volume. The logistics cost has to be kept low. Those are the challenges in my view. But interesting times. I think for media companies, this will be a good time that you may see advertising in some of these categories increase because Reliance entering into those space.
All right. Appreciate your time and thank you for joining us. The discussion was on ITC and we spoke about how Reliance is moving into different brands and the impact it could have on the Indian advertising market. But